You have $700, what do? Do you buy a flimsy new car so you can look cool in front of your coworkers? Or are you a real man and get the Game as Guardian XP Pro Ultimate Gaming Environment Gaming Station? There's only one left, come on, just buy it, they're gonna run out. It's the first one. The first one is the right answer, according to 100 million Americans. The average new car payment is $725 per month because we have the highest auto loan interest rate in 17 years, according to Fred over here. You're probably thinking, how can these goofballs afford this? With today's inflation, that'll barely buy you 3 loaves of bread. Well, they can't. People are getting their cars taken away left and right, up and down, forward and back, and fucking triple no scope. The auto loan debt is at $1.5 trillion.
What is going on?
But we're not in 1995 anymore. We have inteligencia artificial, or as others like to call it, AI, bitch. These are my wife's. It can save us, right? I made a PowerPoint to find out. We first have to go back to when this all started. Mesopotamia, 5,000 years ago. The first loan was invented. At least we think we're really good at digging, okay? The year is 1908. As the Wright brothers are about to finish all their 50 sky achievements on legendary difficulty, Henry Ford unleashes his first army of motorized vehicles onto land. Ford didn't offer loans back then. Instead, you would just give them money every month until you gave them enough to pay for a new car. And then they would just give you the car. So they were pretty much like a checking account, except you couldn't use your money. In 1919, GM created a finance branch that allowed more people to obtain these bricks on wheels. But they had to pay back the loan in 1 year because GM was terrified that the cars are gonna break down and people are gonna throw all their money into repairing the cars instead of paying down the loan. It took Ford 10 years to man up and jump on this loan wagon and start making some real money. By 1932, out of every 3 cars were purchased with a loan. And 9 out of 10 dentists were stressing the out because everyone had bad teeth back then. 1956 was a big boy year for the car market. The Federal Aid Highway Act started plopping roads all over the nation with one of the most simple but also confusing numbering systems they could possibly think of. Also, the credit score was invented. You know, because these lower class chumps with no financial education didn't need a car. Where are they gonna go? Do they have like a minimum wage job that is like 30 minutes away or something? You may be thinking at least lenders were being honest, right? No, they weren't. 1968 established a bunch of new rules, like that all the hidden fees and all the costs have to be shown on a loan contract. Obviously, when people found out about all the hidden fees, they weren't happy and were like, stop, dude, I don't want to pay that, come on. And all the banks were like, okay. So they introduced the 0% APR, but you had to buy down the interest rate the same exact amount that the lender would have made in all the fees and interest. Throughout this video, I'm gonna use the word dealership, dealer, and lender interchangeably because they're all part of the problem. And when I'm talking about a lender, I'm not talking about some bank. I'm talking about the financial department in a dealership. Today's 0% APR loans are a little different though. You don't need to buy them down. As people started leveling up their false perception of themselves with new cars, they also had sleepovers with their little buddies and they had conversations that went something like this. Dude, I got the Honda CR-V 3PO for like 6%. What? Dude, I got the same one except it's the Honda CR2 D2 Hybrid Plus, but I'm paying like 20% in interest. I haven't fed the boys since Tuesday. What's your credit score, dude? I don't know, like 10? More rules were created in 2011 that required lenders to explain to people with bad credit scores why they were getting higher interest rates. Over the next 12 years, nothing really happened. Except 100 million people obtained an auto loan, the average monthly payment increased to $725 per month, and the debt reached $1.5 trillion. Trillion. Supply shortages, inflation, rising interest rates, all caused the monthly payment to go up. But wait, 1, 2, 3. We're missing one. Lies, deception, a clipboard, and the phrase, what car can we get you in today? Because I have no moral standards and I will do anything I can to help ruin your life. Predatory lending practices. That doesn't look good. Get out of here. Now, ignoring all the racial discriminations that dealerships have been accused of in the past, they still lack the moral obligation to make decisions that are for the customer's best interest. In other words, they will do anything they possibly can to make the consumer purchase the most expensive car that they can legally underwrite to them. Lending is up to 45% debt to income. So if you have an average salary of $60,000 and you don't have any other debt, they can lend you up to $2,200 a month. That can buy you a $140,000 car. You can't afford that. That's like a maxed out Tesla Model X. And therefore 6.1% of borrowers are over 2 months past due on their payments. The good news is, that's a new record. Borrowers with bad credit scores get interest rates up to 22%. That's like a fourth of the car's value that you're paying every year. Some of these loans are up to 125% loan to value, meaning people borrowed more money than the price of the car. Stop, this is This is nuts. Okay, let's review basic personal finance rules. The most reasonable rule in today's world is the 24-10 rule. You make a 20% down payment, you do a 4-year loan term, and you can't spend more than 10% of your monthly income on transportation costs. Papa Dave also has a rule that the car price shall not be more than half of your salary. These are decent rules, good to follow. There are other rules that are just like not realistic, like the 1/10 rule. This rule states that the car price cannot be more than 1/10 of your income. And then you have to drive the car for 5 to 10 years. No, here's why. Based on the way you're dressed and that haircut, I'm gonna assume you make $60,000. That's the national average. So with the 1/10 rule, you can't buy a car that's more than $6,000. That essentially buys you a motorized turd. These cars will not last 10 years. I don't even think they'll last 5 years. Maybe 3 years on average. So over 15 years, you're gonna have to buy 5 cars if they each last you about 3 years. This is about $30,000. Now, on the other hand, if you just bought a new car for $30,000, with the regular 24-10 rule, you would have a $6,000 down payment. You would finance $24,000 over 4 years. You could get a rate of 5% if you go with the credit union like USSFCU. The amount paid in interest over 4 years will be $2,700. Dude, I ain't paying that. I'd rather float down the river to work. The $2,700 actually buys you more than you think. Better gas mileage, improved safety, modern tech, drivetrain warranty, you know the surface history of the car, and it's a brand new car. You're gonna feel way better driving it than some ancient potato on wheels. The key is to drive it for 15 years though. And you can get a pretty good car for $30,000 like a Toyota RAV4, a Subaru Outback, a Mazda CX-5, and heck, even a Tesla Model 3 after the rebates and the gas savings. But how do you know if these cars are a good fit for you? Because you're a special one. We gotta treat you right. What if you need a smaller car to fit into tight spaces? Or a bigger car so you can drive your jet ski?
The key is not to drive your jet ski in the dark.
Well, my friends, let's wander over to the chatbot. Current AI models like ChatGPT can help you find a motorized vehicle that's a good fit for you. Yo, broski, what car do you drive? I don't drive a car. I drive a truck. Okay, what truck do you drive? A Subaru Baja. Unlike a dealership, ChatGPT can help narrow down your search without being incentivized by some commission. But like with other living things, you have to make a conversation to get the most out of it. Instead of just saying, give me car now, computer, ask the AI system what it needs from you to give the best results. Then just answer whatever questions you want and you will get a fairly good list of cars that will meet your probably very picky needs. Now the scumbags, dealerships are gonna include hidden fees and costs for stuff you don't really need. ChatGPT can help identify those hidden fees and which ones you can actually negotiate. For example, the extended warranty that's offered by dealerships is borderline a scam. They keep up to 50% of what you pay them. If you really want a warranty though, I suggest checking some third-party providers. Gap insurance is another one. You can almost always get a better deal from your insurance provider or a third party.
Be better than the Gap.
ChatGPT can spit all this information out, but you're still gonna have to put on your diamond armor, recharge your shield, take a chug jug, and go face the final boss yourself. Ugh. Negotiations. Let's haggle. I said get out of here. Go. You probably have no idea how to haggle with these clowns, but they do. In fact, they're level 100 and you just got your starters. On top of that, sometimes more of them will just tag in. Now you're dealing with 2 of them. Before you know it, it's you against the entire Kia of Chicago because they don't want to take off the $500 floor mats. These aren't even liners. Well, you can use AI tools like Edmund's ChatGPT plugin to generate a list of all the nearby listings. Then when the dealer's trying to rip you off, you can go, hey, Mr. Dealer, you're a f***ing wet rat. One thing AI currently can't help you with is auto loan bias. I'm back. What did I say? Get out. This is the lender discriminating against your race, religion, gender, age, and even your clothes. Where did you get that? Ross? Ugh. Okay, 30% interest rate, that's the best we can do. Just don't touch anything. Currently, in order to start a loan, someone has to manually sit there and check the income, the credit score, and all the other boring stuff. This is usually where the loan bias occurs, resulting in higher rates, unnecessary fees, and just overall taking advantage of someone. However, lenders are trying to implement AI tools into the underwriting process to ideally remove this bias. It would also speed up the loan process, as if they're not giving out loans fast enough already, and it would detect risks better. So more people would get denied, but this is actually a good thing because those people probably couldn't afford the loan to begin with. So AI could save you money, I think. If you like what you saw, like and subscribe. Thank you.